Yeah, and let's get to Mark Lackey. He's come in here to talk about iron ore, and he's with CHF of Capital Markets. And I'll bring up iron ore because I know a lot of people on the street have gone negative on iron ore of late.
Particularly, Pat, in the United States. You're right. A lot of the big U.S. banks and U.S. brokerage houses are talking $75 by the end of this year and then staying there over the long run. In Canada, I'd say more of the people are probably in my range, more like we'll see some improvement later this year, and the long run price more between 110 and 120. So it's an interesting divergence.
Where's it now?
Oh, about 94.5.
Okay.
The Australian government's saying 100 long term. So the U.S. guys seem to be a little bit out in the tail of the distribution there, but they actually have, typically they have more supply than I expect, and they have less demand. So, I mean, it's a consistent argument. It's just one that I don't necessarily agree with.
Okay, what is their argument as far as the supply side is concerned?
Well, for one thing, Pat, they've got more supply. Australia and Brazil were both fairly similar, and there was a little more supply out of Australia this year than we anticipated. That's one of the reasons why we backed off about $10. But they're now at a point in Australia where they're pretty much maxed out. So they're going to have to add infrastructure, which the new Conservative government wants to do down there, but it's going to take more than a few years. The real difference is in West Africa. They're suggesting more new production in the next 3 to 5 years, and I feel badly for West Africa, but there are political problems, labor problems, and again, where is Ebola? It happens to be in the countries that have iron ore. So I think right now I'd be skeptical about seeing any significant supply coming out of West Africa in the next, say, 3 years.
You're almost potentially looking at a supply disruption.
Well, I think, Pat, that's certainly possible. And I'm not actually factoring that in yet, but I do think that's a possibility, which is one of the reasons why when I say 110 to 120, I mean, I could see 120, 125 if we do have some supply disruptions from West Africa, which, depending on how bad things get, could certainly be possible.
So your risk is to the upside, if you will.
I think it is, definitely.
Okay, what about the demand side of things?
Yeah, and again here, I think people are missing the boat on a few things. Number one, if you look at steel, where is it big? Autos, non-residential construction. Yes, that has slowed down somewhat in China. And infrastructure. Well, infrastructure programs have been announced, and they're actually starting to take place in China, India, and Indonesia as we speak. But the auto side is the one that's interesting. China's up to 20 million vehicles a year. Looks like 23 next year. India, under the new government, which a lot of people haven't seemed to caught on to yet, the Prime Minister did a great job as a provincial leader in turning around a province and getting it to grow more quickly than any other. He believes in the markets, he believes in tax cuts. We've seen auto sales up 14% year over year the last 3 months. So I think India is the next big place where steel demand is going to rise more quickly, and thus iron ore demand, than people anticipate, Pat. I think that's
both on the car side and the infrastructure.
Exactly.
Yeah.
Exactly, because he's a big fan of infrastructure as well, and we've seen it again in his previous province.
Okay, so how do we play it? Century is your first pick.
Yeah, Century Iron Ore, Pat, we've had that on before. That's a well-run company. You'll notice all the companies are out of Quebec today, and that's not a coincidence. New government, spending more money down at SEPDEAL. And of course, the one big point I would make, the Panama Canal is being deepened and widened next year, to be done about a year from now. That's a huge factor, Pat, for the Labrador Trough, because they're going to get the biggest benefits from going through to China. It cuts off a lot of time and cost, as the bigger ships can now go through the Panama Canal. So I think that's important for investors to realize that I'm picking Quebec companies. It's no coincidence. Century, the management team at Century, Sandy Chin and his group, they ran Consolidated Thompson. I think I put that stock on another network at $1. It went out at $17.25 about 4 years later. One of the great success stories in Canada. Sandy's brought a lot of his people over, with the exception of Brian Tobin, who I think is now at BMO. And they're putting together a world-class operation. You look at the fact they're a near-term producer. They will be producing next year. So this is a well-run company, no debt. And the other big thing, Pat, they've got two big Chinese partners, Minmetals and Wisco, which are in the top 500 companies in the world. And so I think that this is a de-risked situation, and we get higher iron ore prices. I think this is one of the better leverage plays. I think the preeminent junior company in the trough.
Lamely, you and I have talked about before.
We have mentioned that.
In part because of management.
Exactly, Pat. That's exactly right. And Lamely are some of the people who were at Consolidated, Century, and they're guys that are very good in earlier stages. Hubert and his team, they picked up, they've got some terrific management team that they put together with people that have come over from Century that were also Consolidated Thompson. I like the project, Pat, because it's in the southern part of the of the trough, which means less transportation costs. And some of the initial work they've done on it, the grades and the volumes are exceptional. So I think this has got a chance to also be a significant new project down the road. Pierre Lortie, the chairman, I don't think, if you know anything about Quebec, you know who he is. And so this is a management team, Pat. You know, both these companies had management teams that I just never saw in the past in junior companies. And it's interesting how a lot of people have kind of stayed away from junior companies, but if you look at the best management teams, they're as good as you're going to find. This is another one I would say that's at that level.
Okay, and the last one, I think we talked about Fairmont before too.
That's right, and Fairmont, as you know, Pat's had a bit of a move here since I last talked about it. Again, because the management, very strong team. Now they're more in the Saguenay region
Yeah, we were
of
talking
Quebec.
about that 13 cents.
That's right, that's
right.
exactly right. So we've moved up to 20. Lately, they came up with their permits. They've got their construction people in place. This is actually a near-term producer that doesn't seem to be on a lot of radar screens. But I think, again, that's up to people like myself and this network to change those things and to get these stories out. And again, Pat, they're going to be shipping here in the next 6 months. It's an interesting play because, again, they've got titanium byproduct, which is very valuable. So it's, again, over in Saguenay. It's out of the trough, but a Quebec-based company with very good management, and they've met their timelines, and that's one of the reasons why I started to look at this stock, I guess about 4 or 5 months ago.
Okay, now against the background where you're looking at these small caps overall,
right.
We've got a market, stock market, the S&P 500 had those records not that long ago, and then backed off and seems to be rallying
Right.
yet again.
That's right.
Heading out. How do small caps, are some of the small caps in Canada starting to get attention again?
Some of them, Pat. But I mean, I'll be honest, if you look at the venture index, it's at 1,000. It's not quite where we hoped it would be.
Yeah.
I mean, it was at 2,400 in 2011, it was 3,600 in 2007. So you have to be more of a stock picker. And we are getting, and I'm seeing it more and more in the last 6 months where more people are talking about small cap companies. But I'll tell you, it's not at the level I'd hope it'd be. But I think, again, if you're more of a stock picker then, and that's what you have to be here, because you're only going to get certain companies people will look at. And if you've got the management, a good jurisdiction, and you've got money, then at least people will look at you. But I have to tell you, it's been a battle to get more brokers and more people to look back at the small cap sector. But I can say the last 6 months has been more positive. And I'm hoping as we go through the next 6 months and the next year, we get more and more people to recognize they can put part of their money in a more of a speculative area.
Yeah, but are you looking for retail investors to do that, or are you looking at pension funds and institutions?
Well, we're looking at a combination. I mean, I recognize that the retail investor hasn't really been back in the big market as much as we'd like.
No.
So that's been an issue. But we do find some high net worth people, Pat, who understand these stories, understand mining and small caps, that will put their money in. To get more of the general public, it's a little more difficult. I do think we are starting to get more institutional interest. So that's positive. Some of the institutional people are coming back into the mid caps and some of the small caps. It's not across the board like we had between 2002 and 2008. It reminds me more of maybe 2001. Now, are we going to get the run we had before? That's hard to say, but I do think there will be, specific companies like we mentioned today, Pat, that have really good management and are in a sector we like. Those at least have an opportunity to be successful. I'm not buying blanket across the board maybe as much as I once did myself, but I am picking up on those situations. And you know what? There's more of them out there than people realize.
Yeah, no question. Mark, great to have you here.
It's great to be here, Pat.
Mark Lackey joining us, CHF Capital Markets.